most of the companies that are going to blow up have blown up. But there is one important situation that's currently kind of bubbling away that people are not sure how it's going to play out. So Genesis trading and what's going on with GBTC. So we had Steve McClurgan the other day. We've talked about that with him. It's actually affected one of my sponsors. Gemini is a sponsor.
Yep.
They hold 900 million of their customer funds.
Yep.
What's your read on it all? Or let's just go back a step. Do you want to explain what GBTC is to the listener?
Sure.
And then talk about the trade that everyone was piling in, what the benefits were, why we're negative, and then let's get into the details.
Sure. So GBTC, Grayscale Bitcoin Trust, was founded in 2013, and it was maybe 2014, but it was and it trades over the counter OTC. So it was really the first thing in kind of Wall Street or legacy funds could access that was like Bitcoin exposure. So it's a closed-end trust, meaning you could bring $100 or equivalent amount of Bitcoin to Grayscale. You'd give it to them, and then they'd give you shares of GBTC, an equal amount, or at least an equal amount of net asset value in this wrapper, in this GBTC wrapper. And at first, it was locked up for 12 months, so you couldn't sell it or exchange it elsewhere over the counter. But that changed to 6 months in 2020. But this product has a built-in 2% fee forever. So whatever you hold, that net asset value, they take 2% of that, divide by 365, or like technically it's like probably divided by 252, like the amount of like Wall Street trading days, and they shave a little bit off that net asset value as a fee in perpetuity. And that's what you sign up for when you redeem shares of the trust, or not redeem, but create shares of the trust.
And the reason to buy it is because you can't get direct exposure to Bitcoin. You just want somebody else to handle that exposure for you.
There's a couple of reasons. One is because Grayscale was the only product on the market for such a long time. So for instance, it traded at a premium to net asset value for almost its entire existence. So I told you, you bring $100 to Grayscale and they give you your GBTC shares. Well, for the longest time, for instance, if it was trading with a 20% premium, you would go to Grayscale, you'd give them $100 or $100 of Bitcoin. You'd get $120 of GBTC shares that has a net asset value of $100, but on the market, it's worth $120. So whether you were interested in the Bitcoin itself or you just were interested in the arbitrage, there was almost like this kind of ability to pick up free money for the longest time because it was the only option for Roth IRAs and Wall Street and whatever. And really this kicked off in a big way. Like they held Bitcoin and they held like 200,000 Bitcoin going into 2020. But post-COVID, money printer go burr. There's all these Bitcoin catalysts. Here's GBTC trading at a premium to its net asset value. This became a real popular trade on the street and for crypto funds. And so and they switched that 12-month lockup to a 6-month lockup. So a ton of funds came in, and whether they were shorting Bitcoin and buying the GBTC, or they were just outright buying, taking their Bitcoin or dollars to Grayscale to get the shares, they pummeled into this trade. And like specifically, like say at the end of the year in 2020, some funds literally would go to Grayscale like with a couple days left in the year, just to mark up their books. They'd give the $100 to Grayscale. They'd get $120 of GBTC back that they can't even move yet, and they'd mark up their year-end funds and be like, look at our net asset, or look at our performance this year, right? Because all of a sudden there's that, you say 20% performance. And so I'm not saying they did that with their whole fund, but there was an incentive to do so, a massive one. And so as it turns out, right, Genesis, which is a subsidiary of Digital Currency Group, which is the owner of the Grayscale product, has a lending desk, and they were allowing all of these funds, both in TradFi and crypto, to pledge crypto assets, Bitcoin, shares of GBTC as collateral. So I could go to DCG, and the funds did this specifically, Three Arrows Capital, I believe BlockFi, although don't quote me on that, and a few other funds went to Digital Currency Group. They got shares of GBTC. They pledged them with Genesis, borrowed more money, whether in dollars or Bitcoin, went back, did it again. And so in this process, like if you think of the bull run and the catalyst, everyone thinks of Saylor, which is true. He was like preaching Bitcoin institutional kind of adoption, all this. But Saylor bought 100,000 Bitcoin. Right now he has 130,000 Bitcoin. Grayscale bought 400,000 Bitcoin from, say, the start of about 400,000 Bitcoin from the start of 2020 to when they stopped buying in February of 21. 400,000 Bitcoin. That's not like some days they literally they announced the flows and it was like 15,000 Bitcoin. They just market bought. And so when prices like we said, prices set at the margin, and if there's not any sellers, right, price is going to explode. So GBTC was kind of like a quiet, biggest catalyst in the bull market, and all these funds levered up to put on this trade because it was free money. But what happened was this trade got arbitraged so hard, and people created so many GBTC shares while either shorting Bitcoin or maybe hedging, and eventually selling these shares after a 6-month lockup, that the premium that was historically always a premium, or like 99% of the time a premium, went to a discount to net asset value. And so the day that premium went to a discount, Grayscale stopped buying shares. So in February of 2021, Grayscale stopped purchasing Bitcoin, because why would you bring $100 to get $99 back in something that you can't access for 6 months and doesn't have liquidity that Bitcoin does? So there's no incentive to buy it, to create any more shares of GBTC anymore. And it's an illiquid product. And so as it turns out, not only were funds doing this, but DCG itself was going to Genesis, borrowing money and buying GBTC on the market to attempt to prop up that discount to net asset value, to get it back to flat or to a premium again.
It sounds a little bit like what Luna was doing. There's synergies in that you're trying to essentially manipulate the price.
Yeah, I mean, it's maybe not what Luna was doing. Honestly, maybe the parallels, and it's a little different, but the parallels are maybe more of like what Alameda was doing, in the sense of parent company, subsidiary that were supposedly not related to each other, using leverage and pledging their own shitcoin. And I understand that, like FTT, there was nothing backing FTT. Legally, the Bitcoin backs the GBTC trust, the Grayscale Bitcoin Trust. But and legally, it's the shareholders that have title to the Bitcoin. The only problem is there's no redemption possibility. So if there's Three Arrows was huge in this trade, when all this started to blow up, Three Arrows, and I think BlockFi was one of the customers, or one of the counterparties of Three Arrows. The Bitcoin exchange rate starts to go down. They have these loans from BlockFi. BlockFi is like, hey man, margin call. BlockFi starts to sell off the GBTC because that's the collateral. But the problem is, and even Bitcoin during certain deleveragings doesn't have all that much. It has buy side liquidity, but if you're trying to sell $5 billion of an asset, and that's not typical, the exchange rate's going to go down. And so with GBTC, it does a lot less volume than Bitcoin does. And so you see during every single one of these whether it's the Luna implosion or the FTX implosion, Bitcoin went down, but that GBTC discount went down more because there was forced sellers of this product. And as it turns out, DCG was kind of, and you can argue, I'm not a legal expert, but you can argue that there was sufficient disclosures or not about the company doing these things. And they really had their hands on both all of the upside catalysts in this bull market and many of the downside catalysts too.
But it seems like they didn't really need to do it. I can understand why they want to prop up the price. But it seems like if you said there's a management fee of 2% in perpetuity, even with the discount, they're still getting their 2% in perpetuity.
30 Bitcoin a day.
Yeah, I mean
30 Bitcoin a day.
They didn't need to do it.
Nope.
And I don't know what the kind of strategy behind it was, but they're trying to push against the natural market forces that's pushing that into a discount.
Yep.
It seemed like, I don't know, it seems pointless to have done it, because one, it's risk.
Yep.
Not only risk for them, but risk for Genesis customers, potential legal risk.
Yep.
Why do it?
Yeah, I mean, I can't think of many other things than greed. And I'm not one to, judge. Do what you want, but the market forces are certainly kind of it's like there's a reckoning coming. Like just off of Bloomberg headlines, the SEC and the DOJ and all that are looking into the Grayscale DCG operations. There is, and we'll see how it plays out. There is an activist campaign to redeem GBTC that's gaining plenty of traction right now.
What is that? Can you talk to me about that?
So there is organized by, in part, David Bailey, redeemgbtc.com. It's somewhat of a coalition to organize GBTC shareholders to get some form, and what capacity is yet to be known. There's not an official planned action yet, more so just a way to organize and coordinate shareholders, right? Because 600,000 Bitcoin, like billions and billions of dollars of value are locked in Hotel California with no way out, with this company that may or may not face bankruptcy, and is, owes money to all these, owes money to Gemini's Earn product and all these other counterparties. They have this really golden goose of an asset, which is this Grayscale Bitcoin Trust. And so, trading at like price equivalent of, if Bitcoin's at 17,000 and it's trading at a 50% discount, right? Like that's Bitcoin trading at $8,500. And so like equivalent, right? So a lot of people that have bought GBTC have gotten screwed. And this is people in Roth IRAs, this is institutions, et cetera. So, the SEC, for what good reason or not, isn't allowing an ETF, which an ETF would fix these flaws, right? Because an ETF, every dollar of buying pressure, every dollar of selling pressure is a dollar of Bitcoin that's acquired or sold, which is not what happens today. The Grayscale, no Bitcoin can leave that vault. So Redeem GBTC is we'll see if it's successful, but it's certainly gaining plenty of steam. I know firsthand there are big boy institutions that are getting involved. So we'll see what happens. I'm no legal expert, but I think there's certainly more so than ever, there's a risk of not a risk, but it would certainly be a tragedy if I was Barry Silbert, and I don't know him. I have nothing against him, but he, it would be the fumble of a century to lose that cash cow.
Well, we brought this up the other day. We were talking about how one of the most interesting parts of this kind of bear market cycle, and the number of the people who are either billionaires or believed to be billionaires and to be believed to be some of the most successful people in the industry, have taken ridiculous risks, not only with their own capital, other people's capital, reputation. Some are certainly risking jail time. I mean, I've also seen Mashinsky's being sued by the New York AG, but so many people with great certainly credible reputations.
Yep.
I mean, if you're Barry, maybe some of the Bitcoin maxis don't like you.
Yeah.
But like good reputations and serious amounts of money,
Yep.
and they've taken this massive risk and they've wrecked themselves, wrecked other people's, wrecked their reputation, wrecked their career, and potentially facing jail. I just don't understand. I mean, I was talking to Danny saying, look, if we could take this, with the podcast, if we could take this big risk, and we might be able to 10x our money, but if we fuck it up, we're going to be wrecked and in jail. We wouldn't do it. We're not fucking more. So I don't understand why these people have done it. I don't understand, Dylan.
Yeah. I mean, like if you just look on public Twitter, Barry was in February was bragging about buying tens of millions of $50 million, $100 million of Zcash, right? Which is like a bottom tier shit coin.
Yep.
So like, again, like I don't like relish in the success or failures of others, but like it's certainly like, at some point, you pay the piper. And it's interesting that, yeah, I agree. Like so many people had the world and lost it all. I mean, Peter, I do ponder though, like, and we're both sitting here. We're both surviving. We both didn't lose all of our Bitcoin. At least I can't speak for you, but
no, I'm good. I mean, look,
yeah.
It's I've accumulated, and
yeah,
certainly I'm under. Like if you consider, I'm certainly underwater on some of it.
Yeah.
I've been accumulating since Bitcoin was at.
But you're not zeroed.
No, not at all.
No. So, but I do wonder, not wonder, but like I try to be a little empathetic and like, okay, if I was on the cover of, not on the cover of Forbes, but like if I was like, this hotshot billionaire, and if you just look at some of the stuff that was happening in the bull market, like Three Arrows Capital was borrowing hundreds of millions of dollars unsecured, no collateral, just an IOU. Like maybe that, maybe it was tempting to them. Like I certainly think I would have been a little more prudent in those shoes, but who knows? I mean, it's pretty mind-boggling how many zeros there are. And Forbes, if you look at the recent Forbes list of crypto billionaires, they marked Barry as a zero.
Did they really?
Yeah, if you look up, I think they published it on December 24th. If you look up Forbes crypto billionaire list, it says Barry Silbert X billion to now zero.
Holy shit.
Yeah. And I mean, that's an estimate, but when you can't pay your loans, I mean, yeah.